The Indian stock market has a rich and fascinating history that dates back to the 19th century. It all began in 1860 when a group of stockbrokers gathered under a banyan tree in Bombay, now Mumbai. This informal meeting laid the foundation for what would eventually evolve into the Bombay Stock Exchange, or BSE, established in 1875. This was a time when India was under British rule, and the economy was primarily agrarian. The stock market was a new concept, but it quickly gained traction as the country began to industrialize. Fast forward to the early 20th century, and we see the emergence of more organized trading. The BSE became the first stock exchange in Asia to be recognized by the government in 1927. By this time, more companies were listing their shares, and trading volumes began to rise. However, the market was not without its challenges. The Great Depression of the 1930s hit the Indian economy hard, leading to a significant downturn in stock prices. This period taught investors valuable lessons about market volatility and the importance of regulation. Post-independence in 1947, the Indian stock market underwent significant changes. The government aimed to promote economic growth and development, leading to the establishment of the Securities and Exchange Board of India, or SEBI, in 1988. This was a pivotal moment, as SEBI introduced regulations to protect investors and ensure fair trading practices. The liberalization of the Indian economy in the early 1990s further transformed the stock market. With the introduction of new financial instruments and the entry of foreign investors, the market began to flourish. The 1990s were a roller coaster ride for investors. The Harshad Mehta scam in 1992 exposed the vulnerabilities in the system, leading to a massive overhaul of regulations. This scandal, involving stock price manipulation, shook investor confidence, but ultimately paved the way for a more robust framework. The introduction of technology in trading during this period also revolutionized the market, making it more accessible to the average investor. As we moved into the 21st century, the Indian stock market continued to grow, with the National Stock Exchange, or NSE, emerging as a major player alongside the BSE. The dot-com boom in the late 1990s and early 2000s saw a surge in technology stocks, while the global financial crisis of 2008 tested the resilience of the market. Yet, the Indian stock market proved its mettle, bouncing back stronger than ever. Today, the Indian stock market is one of the fastest growing in the world, with millions of retail investors participating. The rise of digital trading platforms has democratized access to the stock market, allowing anyone with a smartphone to invest. The market is now a reflection of the country's economic potential, with sectors like technology, pharmaceuticals, and renewable energy leading the charge. In recent years, we've witnessed the emergence of new trends, such as ESG investing, where investors are increasingly considering environmental, social, and governance factors. The market is also adapting to global challenges, including the impact of the COVID-19 pandemic, which has accelerated the shift towards digitalization and remote trading. The full history of the Indian stock market is a testament to resilience, innovation, and the ever-evolving nature of finance. It reflects the journey of a nation that has embraced change and continues to adapt to the global economic landscape. As we look ahead, the possibilities are endless, and the Indian stock market remains a vibrant arena for investors seeking growth and opportunity.